Good morning, Paul Georgie from Allendale. It's June 16th, Thursday morning. Well, we got the USDA export sales reports out this morning. Old crop corn, 296. They were looking for 250 to 700. And new crop corn, they were looking for 600 to 800. Came in at 599. So pretty neutral in the corn market. Soybeans, old crop anywhere from 50 to 150, came in at 179 on exports last week, while new crop, the range there was 100 to 300, came in at just 6,000. So not very many exports for new crop soybeans. Wheat exports 350 to 700 was the range, came in 455. So nothing real exciting there. Maybe a little bit adjustments in the spreads between old crop and new crop in the soybeans. Fundamental picture continues to be okay. Nothing real exciting going on there. The weather conditions are good in most cases. We still got some planting to do. We've still got the Missouri River problems and a number of acres there that are being flooded and damaged because of water and levee breaks. But in general, the Corn Belt in the Midwest is getting more moisture and warmer temperatures, and should be excellent for corn growth here and soybean growth over the next week or so. Some other outside news: China bean imports expected to be 10% less than a year ago. Then that is mainly because of the poor crush margins. They've extended the cap on soybean oil or edible oil values in China, which allows the processors to the margins there to be extremely tight, and certainly slowing down demand. Now, that was an excuse yesterday for the strength in the soybeans that China did come in and buy some beans. We'll have to watch here at the 8 o'clock hour in the next few days anyway to see if China did actually buy some soybeans. The action that we've seen in the grain markets and the commodity markets yesterday was certainly a liquidation type effect across the board, or I should say in some commodities. And that's the real head scratcher about yesterday, is we had some commodities that we seen liquidation in, others we seen a rally in, like soybeans, for instance, higher on the day, corn and wheat sharply lower, crude oil down sharply. This action continued overnight. We got the old crop down more than the new crop in most cases, and some of that is because of needed liquidation. We've got tremendous size and open interest in the July contract. In talking about corn specifically, we had large open interest in July corn. That open interest needs to migrate to another contract or be reduced in size by the first notice day, which is June 30th. So we're going to see some more liquidation there, and probably some more pressure here for a moment. However, the positive side of the equation is that the cash side, the cash markets, are still very strong. Basis continues to strengthen in the eastern Corn Belt, and therefore carrying across the entire Corn Belt, which is an excellent opportunity for anybody that has hedged and has used the futures market as a way to protect their production. So we expect that to continue. We've got option expiration next Friday. So all of these things coming together is certainly a reason for some of the liquidation that we're seeing. And I think what we'll be seeing over the next several days is volatility, and I think that is going to be needed in order to get these positions adjusted and moved around to where traders are comfortable. Other news, the wheat versus corn spread has gotten a lot of talk and a lot of attention here because wheat prices are below corn prices. We're seeing actually some poultry producers here in the U.S., Tyson and Pilgrim's Pride, it said that they are going to add more wheat to their poultry rations for parts of their flock anyway. So that is and should give some support to the wheat, but it also is a negative to corn, and that's why we're seeing some of that volatility. We also got news out of the EIA yesterday that ethanol production was not meeting the level we need in order to meet the USDA's usage projections of 5 billion bushels. So that was another straw on the bears' side and helped pressure markets yesterday. Macroeconomics, another thing that has had its impact on all commodities, the Greece situation, and then the news yesterday that some of the major French banks had carrying quite a bit of debt for Greece, and that has got traders here in the U.S. concerned about the stability of the world economies, and allowed some had investors selling out, and that's caused some pressure there. We had the dollar down 36, crude. Our dollar is currently up 36, crude down 30, and gold is unchanged. So not too much excitement there. As yesterday, we've seen a huge rally in the dollar, giving us some more news to cause sellers to or the longs to get out of the market here yesterday in the grains. In the livestock trade, we got cash markets waiting to trade here. We've got bids and asks at a wide range. Bids down around 103, asking prices 107, 108. We expect that we could see some trade here today, but that it's going to probably be led by the mercantile exchange. If we see a sell-off there, the buyers will have more strength and probably get cattle bought a little less than last week, which is around 105 to 107, depending if you're north or south. That will also so that'll impact us there. The hog market, we've got cash market strong. Expect to see some strength there. The bull spreads continue to work in the hogs, which is normally a positive indicator. So if you got any questions, give us a call here at Allendale at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.